All right, good morning, everyone. Or Saturday, the 1st of June, and I'm going to be going through a market review, things I saw this week. Now, the first thing I kind of noted was the divergence between the NASDAQ, the S&P, and the Dow. You can see the NASDAQ is strong. It's really not wanting to go lower. The S&P is kind of in the middle, and the Dow is absolutely having a heart attack. I always say that I like to see the NASDAQ be the leader. If we're in a bullish market, I want NASDAQ to be making those highs. And I'm kind of taking that same concept and applying it to a bearish market. If the NASDAQ has the stocks that have the most money, right, like the tech stocks, it would make sense that if we're really in a bearish market, eventually tech will go lower, and when tech goes lower, that's when you see real lower prices. So the fact that the Dow is already this much lower, the industry and the consumers are not buying enough stuff. So a lot of the industry and retail stores and fast food chains are breaking down, and they have bad earnings, and it's causing a big move lower in the Dow. If this is to pull the tech stock down, and whenever the tech start to go down, we should see even lower prices. That's basically what I'm alluding to. And potential SMT in the forex. So dollar has been making lower highs with euro, but British pound has been making higher highs. Now, some reasons why I don't really like SMT is because sometimes these things can be just low resistance liquidity. Even though there's some SMT, it's possible that price just might not come all the way to the high, but might run through this trend a little bit, maybe like up here, just to run out some of these highs and kind of like break this trend, give the idea of a false breakout. Therefore, that's one thing you have to be careful with SMT. It's not always SMT. If there could be a false breakout and the SMT may hold, but you can't just assume a reversal right away as soon as you see SMT. I said ideally I'd like for the dollar to continue trading higher, and if possible, by the way, this is the inverse dollar, right? DXY times -1. So that's why it's actually the dollar is making higher lows. It's opposite to the pound and the euro. But I say I'd like the dollar to continue going higher, but it's possible for a dollar to one more time return to the bullish order block. And this is basically what I'm talking to you. We have higher lows being created, and so that trend, we could drop down one more time, hit the order block again, or in that 50% premium level, and then run higher, which we actually ended up doing on the dollar. And I said that the NASDAQ is in a big premium, right? But nothing tells me lower just yet. Like, I do like how we had initial move down and then a move higher. This creates the impression that there's an order block, right? Or a supply and demand zone. That's just a pattern. It's not an actual order block. That down close candle, just because it had a candle immediately break its high, and we seem that we're not using those down close candles as resistance, they're being used as support, so we must be in a bullish order flow. Just because it looks like that doesn't mean we actually are. This could just be manipulation. However, we could run up one more time and make a new high, like before going lower, or we might not, and we might just start going lower. So I'm waiting for some sort of confirmation. We have a 60-day look back at 92.8%. So that's basically if you do a 60-day look back down here, you go back from 6 to 60 days, right? The algorithm is going to refer to the price action 60 days back, right? Or basically 3 months back, a 3-month look back. As you do on the 1 hour chart, it'd be a 60 hours, so you could think of it as 3 days, and so on. And Tuesday, so we started. Monday was a holiday, so actually no, I had Monday was Memorial Day, but price still moved a little bit. It went higher, so we opened up midnight's around here, and we opened up immediately, went above midnight. So I wasn't looking to do anything anyways Monday, but if I would had looked to do something, I probably wouldn't have participated because we're above midnight open. and I would have just let it deliver. I actually just tape read it. But we have this inverse fair value gap in white here. That is, what is that? It's resisting price all night. As soon as we get above it and we close way above it, we have a big market shift. We come back and use that as support with an order block. Why is that an order block there? Right, those two down close candles, consecutive down close candles there. That's an order block because it ran into a discount underneath some consolidation. So it grabbed liquidity. You need to grab liquidity when you form an order block, right? Price needs to be in a discount. This is a bullish order block, right? Not like a reclaimed order block or anything, but it needs to have grabbed liquidity and then run higher. And then that's a propulsion block as we move back down to the order block and we continue running higher. And price finds support at that propulsion block at the end of the day, which closed at around lunchtime. So it opened up again, Asia, somewhere around here, but price closed at about lunchtime, drawing up into this refined fair value gap. Right? This is the 15-minute chart, but on the hourly chart you have the pink lines which form an hourly fair value gap, and you refine it to this wide fair value gap there, 50% resisted price trading above Friday's high there. And this is a zoomed in view of, I should have just showed you this one, but zoomed in view of what I was talking about. And we had all this consolidation overnight. We ran down just part of it. So we could have ran down, notice how it's like a trend. We could have ran down further, but we ended up just running down part of it. And 9:30, creating a little bit of volatility, but then just being more one-sided. So when you have days where it's like Memorial Day and it's, or vacations, right? Like holidays is the word I'm looking for. Usually price can still move, but you have a very one-sided. Like it's not really gonna manipulate. It's not gonna move up and all the way down. So you can see here it's very, very one-sided. It picked one direction and it just continued in that direction, right? And that's here an inverse fair value gap, which as 9:30 makes its way up and it makes its way down back to the 15-minute order block, right? It runs back to what? A discount, a higher time frame order block. What does it create here? A move lower, leaving a fair value gap. Anyone that's pattern trading might think this is a silver bullet and they're going with what they're seeing on the 1-minute chart, right? And to them, like they might not be looking at the higher time frame PD arrays, right? The order block here, and they might just be looking at 9:30 run up and then potentially create a market shift, and now tried to retrace, didn't work, broke out, left a fair value gap. Now they might be seeing that as resistance, and this is all this is doing is building up orders. Eventually price books it and just goes in one direction. So even though like it was a holiday, the algorithm still sort of booked price at a certain level, right? But Tuesday, things start cooking. We formed the high of the week on Tuesday, and I don't know if that's the exact high of the week, but it just went higher a little bit, right? And this is also including Monday's price action. So Tuesday really didn't do anything, like at all, okay? But this is the Dow, right? Notice the Dow, this is taken the 28th, so yeah, Tuesday the 27th, the Dow actually went lower, so it's still going down. And this is, I'm looking at this and I'm saying, okay, wow, this is very, very bearish, like insanely bearish, right? You look at this down close candle there, the tiny one, and that's this big up close candle in the NASDAQ. I mean, there's so much divergence. So I'm really saying that, okay, at one point, the NASDAQ is going to have to give. It's going to have to give in and submit to the will of the Dow. Right? Usually, I don't like to see the YM leading, but if it is appearing to lead, and the other indexes are not following its lead, eventually they will have to give in. Now we might see the Nasdaq speed up to become the leader. That's to be determined, but that's a different thing. That's a six sister concept. So as we traded into this hourly fair value gap, right? We traded into that on Monday. We came to the refined 15-minute fair value gap, and that's right here on Monday, 50% of that. And now on Tuesday, we have one more run higher during London to make the high of the week and the high of the day, and then we distribute lower. 9:30 open finishes the early morning delivery lower. Now, I didn't want to trade because simply London had delivered higher above previous day high, and then 9:30 had already sent it lower. And if you look at where midnight open is, right up here, I would have wanted to position myself above that midnight open to run down to sell side liquidity. Sell side liquidity didn't get taken yet, so we actually do get a good price action when we retrace back to a balanced price range, which is inside this fair value gap there. This could have been an entry on higher time frame if you're looking for a swing trade and you're expecting lower prices. This could have been, you have a breaker formed here with the break of this short-term high, right? And then you run down towards that sell side liquidity. And if you think it's going to be lower for the rest of the week, I was looking at this regular trading hours gap. You're watching my stream. I did that. No, I didn't record Tuesday. And not stream, but my recordings. I didn't record Tuesday, I don't think. But I was watching this regular trading hours gap here, which is from Friday. And I should have showed it, but or maybe I show it. No, I don't. But this is a wide open gap there that price has not traded to from Friday. So I wanted to see if price would want it to get down towards there. And if you expect it to go lower, you could have held it for lower. But basically, this was a higher time frame entry. After that 9:30 dump lower, you see we have a little bit of consolidation here, just underneath the midnight open. We run one more time above the midnight open, above the consolidation into this fair value gap on the hourly chart and 15-minute chart, and then we run lower during 9:30 open. We reverse higher, that's the Judas swing, and we get back above these relative equal highs. Why? Because if you take off the wicks here, you just see the bodies, right? So this would be seen as what? Resistance. To the people that are trading the line charts, right? Like if you're going on dollar, for example, and I change it to the line charts, well, over here, this looks like resistance, relative equal highs. However, there could have been a wick that actually just went this high, way above this high. And I'm not seeing it like that because I'm not paying attention to the bodies, right? So that's just something to keep in mind when you are go back. That's just something to keep in mind when you're looking at support and resistance levels and where there would be liquidity. You need to keep in mind where the bodies are. So the bodies come back above these bodies to kind of maybe give the impression of a breakout. That price is breaking out, consolidates a little bit above this level. Maybe now people think it's resistance turn to support. What happens is we have this lunchtime consolidation, and the algorithm runs beneath lunch, then runs above lunch, given the impression of breakouts, and then it expands lower, creating a bearish order block. But even though like I can see that the logic is there, it's not too evident. Like we still have relative equal highs and relative equal body highs, right? And we're wicking a lot and consolidating a whole lot. So we have that fast price action lower, but in my opinion, it wasn't very high probability at all with how the day had moved anyway. And then we come right back up into the daily range. Now, that's a lot of volatility. Okay, like for a day, this is an inside day, and we're seeing these huge candles. We're going down, up, down, up. That's a huge day, right? And during London session 2. Now, why? Well, I think I talk about it on, no, this is the 28th. So I think I actually talked about it on Wednesday. Um, but there was something called. I'll talk about it on Wednesday. Um, and then in the morning, you get that nice these inverse fair value gaps you could have used. That resistance turned to support. The idea of a move lower. This was really nice here, but again, we hadn't taken out that sell side liquidity, and I wasn't looking to trade at all. When we got up to the highs, I wasn't trading the afternoon. And I wasn't there to watch the afternoon, but I liked afterwards how it had traded because we got to the highs here above midnight open. We consolidated, moved up above the highs into the balanced price range one more time, and then ran lower. And there's an entry right there. You can use that inverse fair value gap. You can use this inverse fair value gap here. You can use this fair value gap there. All those areas combined that gives a very strong level of resistance to send price lower finally to the sell side liquidity, and then you can maybe start to go long. But I would have not expected the 15 o'clock hour to run against this whole move and one more time trade to the hourly balanced price range. And this was I did a little bit of forex trading because I didn't like the way the stock market looked on Tuesday morning, and I was looking mostly at forex. In my opinion, the stock market didn't really look nice with the way the pre-market and the Asia session had looked. So I decided to, do most check out the dollar, and the dollar looked good. So I checked out the euro too, and I was right. It did move a lot better. But the dollar had traded back through this whole range, right? This was, remember I said that we could see the dollar drop down, right? The 26th is 27th was Monday, so we saw a dollar during Asia drop down, and then Tuesday drop down, run beneath this whole trend to counter that and give the impression of a failed trend and now a breakout. And what happens is we run right back above that high, right? As soon as we enter this fair value gap here. And I knew this was strong because there was a new week or a new day opening gap here. There was a breakaway gap there. And this was a strong level because it was underneath all this liquidity. And it's an open area that price can accumulate in after accumulating orders in the with the liquidity on each of these lows. So I'm going down to the lower time frame. I'm pointing out this trend here, and I'm showing how we had a short-term low created here. We ran back down beneath that short-term low, right? That's a run on stops. We had an initial impulse up and then faked people out and went back down one more time. This created a breaker. We got back above the breaker, used it as support, and then we ran higher, and that was the start of the delivery higher. And again, that is the US dollar. Look at the time it was taken, May 28th, 9:08. May 28th, that was at nighttime when I was doing the daily review. All right. Then this is the euro, again taken at 9:15. I had a 9:30 open. I had this inverse fair value gap in this order block or proportion block that I was watching inside of this breaker, right? High, low, higher, high. And that's the same concept here on the dollar. I'm using this low, high, lower, low. The dollar is inversed, so it is zero against the dollar. So if you're looking at the index of the dollar, it's going to be inverse to what the euro dollar is doing. And we have this breaker there. And I'm basically trading off that idea, right? So I'm pointing down to the first low, but this is something I could have held all week. All right, this is an entry to a higher time frame swing trade, but I'm just looking to day trade here, and I'm wanting to hold down for the majority of the day's range, which is to get down beneath the low here first, and then the low here. Why? Why here? Because this is the A's session. This is the low of the day, and there's a bit of consolidation here. So I'm targeting this area. It was about 3RR, and it initially went lower, and then it came all the way back. And I did not like this move. I almost I was sort of doubting the play a little bit when it came back up, back to the entry. I'm like, what the heck? This is unnatural, and then it continued running lower. But anyways, now to Wednesday, and this is what I wanted to talk about. This is a gem. If you stayed this far, you're gonna like this. Very valuable information. But just before, what happened so far on the daily chart is the Nasdaq left that high of the week there on Tuesday and started to run lower. Um, we had a pretty bad day. I didn't do anything Wednesday because we saw the Asia session. I wasn't planning on trading anyways. It was one of the days I had marked as no trading. But we just expanded lower on Asia and London. So what did I expect for the morning? Chop, moving sideways, nothing. What did it do? It moved against this range overnight. Lots of wicks, lots of inside candles, and then it moved lower in the afternoon again. And that would have been a good delivery in the afternoon, but it took a break in the morning before delivering again, right, and filling that Friday regular trading hours gap. This is the dollar, and we completed sort of that bias I had yesterday. We ran back up to the highs here inside this volume imbalance. I did want this to keep going, but we ended up, I said it's starting to create a market structure shift. The market structure shift, though, I'd want the bodies to close above and to displace above. We didn't do that. We just got above the high, and then we started to retrace back into the range. So now for this part, I had a conversation with ChatGPT, and what happened on the 28th, on Tuesday, was that the markets went from trades being settled in 2 days, so a T+2 settlement, to T+1 settlement. So now trades are settled in 1 day. So I didn't understand this because when I buy stocks or when I buy like futures or anything, crypto, like I always have the impression that I own it right away, right? But that's not true. So first thing I asked is, how is it different from when I buy and I have to wait 2 days to this T+2 settlement? Like I don't have to wait 2 days. And then she said that your transaction is executed immediately at current market price, so it seems instantaneous, but the actual transfer of ownership is corresponded to the T+2 settlement. So it takes place during the settlement period. And then she explained the 2-day period, how it's necessary for back-end processes, including verifying the details of the transaction, ensuring the funds and securities are available, and completing the paperwork. So trade appears immediate, but the final settlement, where you actually officially receive the security and the seller gets the payment, it is 2 business days. So I said, could this be why some brokerages don't like day traders? Right, because I heard ICT, my mentor, talk often about how in the past, brokerages didn't like day traders. They said it's not profitable for us for you to day trade, and they don't like profitable traders. And I didn't understand why. Like profitable traders, they're with them for longer. They make them commission. Why don't they like profitable traders? Like they'll get more commission. Well, this is the reason, because it would run up their brokerage costs. And she said, yeah, it could be part of the reason. She said day traders make numerous trades in a short period, buying and selling same securities multiple times a day. The high volume transaction increases costs, and they have to process each trade, ensure compliance, manage the settlement process. But on top of that, it's annoying because if traders aren't settled before the trades are made, so if I'm trading and I take immediately 10 more trades, and within that exact same day, it can complicate the tracking and management of the funds and securities. Thus, the frequent trading activity of day traders can indeed lead to higher costs for brokerages. It can also be very annoying. So, if hypothetically a settlement period is reduced from 2 days to 1 day, would that be to accommodate more liquidity and more day traders? Let's say hypothetically the settlement, and I repeat that. And ChatGPT said, hypothetically, if the settlement period were reduced from 2 days to 1 day, it could indeed accommodate more liquidity and trading activity. So shorter period means that securities are transferred more quickly, freeing up capital sooner for additional trades. And it could be beneficial with day traders and other active market participants, such as big banks and stuff, as it would reduce the time their funds are tied up in the settlement process. Moreover, quicker settlements can lower the risk of default and enhance overall efficiency of the market. Now, me, if I'm just trading with a couple $100,000, it's not a big deal. But think about the people who are making transactions with billions of dollars and millions of dollars in the stock market, in the forex market, and such, in the bond market. These people, obviously, it would make sense for them to want a bigger or need more time to settle, right? Because they don't want to take trades within their settlement period, maybe because what if something went wrong, right? And that's a lot of money that they have. So they, I don't know, like I would imagine that if I'm operating billions of dollars, I don't want to trade every day, right? I want to wait until I'm settled. So because there's so many day traders now, and because markets are starting to become more volatile, they have the technology to move from settlement of 2 days to settlement of 1 day. And this is what's making the markets more efficient. It's what's making the markets move more. It's introducing more money, more liquidity to the markets. And they're like, ever since the 28th, you'll see every day this week it's been super volatile. So I don't know if it's going to continue exactly like this, but in my opinion, I think that what we're going to see is we're going to see a lot more big moves more times in a week, like almost every day, but we're going to see smaller, bigger moves. So maybe in the past we had a more consolidation and huge moves. Now we're going to see like it balance out where we see less consolidation, more frequent big moves, but they're not as big in magnitude potentially. That's what I've kind of identified. So Thursday and Friday, I forgot to get the economic calendar up, but that's when the bulk of the news was. Uh, Let me get that up actually. All right, so yeah, the economic calendar right here. See, Tuesday we had a little bit of news. Then we had Thursday, which had the big news, right? The pending home sales, unemployment claims. We had the GDP, which was an estimate, I believe, from the second quarter. They maybe enhanced it or whatever they did. I don't know, but it didn't really change much. And then the core PCE price index. So and Chicago PMI. So that bulk of the volatility occurred on Thursday and Friday, and boy did price move. Like it was insane. It was very, very insane. But daily chart traded lower, creating the market shift, starting to create it. And we had fair value gaps left, or blocks here, failing to make a new high. This was my bias on 29th, right? This was Wednesday at 10 o'clock around. I said that I wanted to see Asia session or London session make a move higher. It doesn't have to, it can make a new low, but I mean, I'd like it to make a move higher in the premium. How am I determining premium? From this high, the price leg that ran down to this low. You could also use that high too. And I wanted to see that 50% level, that the premium from 50 to 100%. Price enter that and enter any of these PD arrays, the white one there, this inverse fair value gap one I'm choosing because it was in premium. And I wanted, once it reached these levels, I wanted it to create an order block and then run lower towards the sell side liquidity down here. This is a market maker sell model. Okay, so this is what happened. We left off, we made another run lower, and then we came back to a premium to this level here. This is an inverse fair value gap, and we expanded lower. Also, where this was a consequent encroachment wick. So I show that here. I forgot to, this is something I missed. So I kind of I missed this. This was right here. This wick there, that's a discount wick, this huge wick that ran down, and pair that with that fair value gap, take 50% of the wick. It ran up into this 4-hour fair value gap and hit it. It went 1 point above it, 4 ticks, and then it continued lower. So I missed that level. But so far that day I recorded it too, as this was playing out, happened exactly the way I wanted to see it. We left the order block here that ran up to the level. Price then got beneath the order block. If I zoom in, yeah, there you go. Well, this is the hourly chart. Actually, there's an hourly fair value gap, and you saw the 4-hour fair value gap too in the consequent wick there, consequent encroachment. But you see how price confirms a nice order block on the 1-hour chart, creates a 1-hour reclaimed order block, comes back to it, and the whole time we're also playing with this reclaimed order block there. So we're playing around that, and I'm watching this kind of area to be more or less resistance eventually. But then we get down to sell side liquidity. Okay, this is the 50-minute chart that drew up into that in a premium. Up close candle at 8:30 news, running higher above the consolidation before ahead of 8:30 news. And then once we close beneath this, we're using this as a confirmed order block, and we can start to look for shorts here inside that order block. 10 o'clock hour runs lower, delivers lower as we're coming back inside the order block. I actually took a long. I didn't. If you watched the recording from Thursday, my entry model wasn't there for the short. So because my model wasn't there, even though I knew it was going lower, my model wasn't there. I looked for a short. We touched midnight open. We traded beneath the short-term low, and I wanted to see a retracement back to this area up here. There was an inverse 15-minute fair value gap. This one here. You drag that out, and I was aiming for just the the low of that inverse fair value gap from this low. And then we continue running lower. And yeah, I shouldn't have taken that trade. It was against the trend, I know, but there's nothing I really like. This is the 5-minute chart, which created the also market shift on the 15-minute chart from this low up to that high. Why is that a market shift? Because from this low up to that high, that was a run on liquidity. So you're taking that range and you're wanting to see, once we get beneath that range, a market shift. It's like a landslide, right? Landslide is like this, but reverse it, right? This is the market shift, higher, running up. When we have a market shift, we shouldn't really want to return into the range, right? Oftentimes we don't. But we create that market shift, we stay away from the range, wake into it, and then continue running lower. In the afternoon, we come back one more time. After lunch, retraces, and once 13:30 comes around and people are back at their trading desks, we start the delivery lower again. And again, we create that same short-term high, right above the short-term high, pretend like we're breaking out, and we deliver lower. But yeah, nothing I liked on the 1-minute chart. You see here, absolutely nothing I liked. I saw 9:30 just ran lower. I wanted to see 9:30 run above this high, make a new high, and then create an order block and run lower. That would have been what I wanted to see. But because we didn't create, I am always looking for a 5-minute short-term high to be ran out. So where would that have been? Here. We run out a 5-minute short-term high, and then I had to look for displacement. My entry would have been on this fair value gap or this order block here. It would have been in the 1-minute chart inside this range, or it would have been over here ahead of 9:30 open. But that was before 9:30 open, and I don't like to do that. I wait until 9:45. So that's just my model, right? So there was no trade for me. Price had already left, and instead I got in on a retracement from this to that low to over here, this high, right? So that's the 30-second gap I used to enter my trade. But on the 32nd though, after I get out of my trade and it comes up to this inverse fair value gap, this is the bounce price range. If you pair this gap with that gap, this gap, that gap, the inverse 15-minute fair value gap, which it's not visible here. You take the 1-minute gap here. There's a lot of resistance here, right? I started taking partials over here in this area, and ran up and took more partials there, and I trailed my stop because I knew that there was a lot of resistance in this area, a lot of liquidity there too. So price gravitated to this and then stayed away from the highs of it, and then created these silver bullets that would have been your 10 o'clock silver bullet that runs down one more time, this last inverse fair value gap being used as resistance, and then runs down more. And market maker sell model in the afternoon. I love the afternoon. The morning didn't really look good to me, so I came back in the afternoon and I loved how it looked. I did participate on it. I posted that live commentary for the trade on my YouTube. Instead of recording the whole session, I just recorded the trade. But we started to create a little bit of a trend, which price countered that trend as it's running down to the sell side liquidity, where we were still looking at sell side liquidity. We came short of it in the morning, so we're paying attention to that. And we have this inverse fair value gap here. Now, why did I look at that? Because we have a bunch of consolidation there. Price got above the consolidation, right? And then it created a market shift from this low to that high, that run higher. And this is another market shift here too, right? From that low all the way to this high. As it's creating these market shifts, it can come back into the range and wick up into it really quickly. We're above midnight open too, but I'm looking at all this consolidation. This is an order block, right? We confirmed that order block, I believe, on the see on this time frame and that time frame. So we could run back up into this gap. However, I wanted to see, because we were using this as support, if we got above this and we closed beneath it like we did there and we leave a fair value gap, well, that right there to me is good enough to go short. So I went short with a stop loss up here, expecting to leave a fair value gap, which would be a breakaway gap, which would fuel price to run lower down and give it enough energy to run down to sell side liquidity. So that's what I did, and I wrote real time that it should not fill. I wasn't looking for these gaps to fill. I was looking for anything in the upper portion of the market maker sell model to stay open and not fill, and in the lower portion you see close out the gaps. That's why we see a lot more consolidation, and when it really runs, it's leaving more breakaway gaps. Okay, and that's the trade I took. It was half leverage because I already took a trade and I already won that day, so I took it with half leverage, and running down to these relative equal lows. I just aimed for the first low. I was gonna go into a meeting, so I just looked for 15 points, 10 point stop loss, 1.5 RR. It was, well, good. Wow, that's a voice crack. It was good enough for me because I wasn't looking to trade, and I talked about this, how I was just looking for the least, basically. So yeah, and that's the end of Thursday. And then Friday, I think everyone and their grandmother woke up on Friday and was expecting a run back into the daily's range, or the week's range. Well, nope. We drew so far down to this consequent encroachment wick, and then ran back higher, filling in these gaps. This wick, again, if you take off the wicks, it didn't look like Friday did anything really. So I really don't like the way Friday moved. There was a lot of volatility, but I think that we definitely have unfinished business lower now. We could see this continue next week. But look at so far, we seem to be starting a market maker sell model, and this looks as to be an order block. It could be an order block, but I think that this could also be more manipulation to end up continuing lower, build more liquidity to go lower. Right, we have the high of the week that ran into the rejection block, and we talked about this, like create an order block, and then the 4-hour fair value gap here on Thursday, which ran lower, and Friday opens up, runs up during the morning back into this range. In the afternoon, and this is this is midnight, in the morning runs lower, and then in the afternoon we run higher against the morning. Okay, on the hourly chart, you see we have this consolidation. Whenever you see Asia and the London session consolidate, right, which is 18 o'clock to 6 o'clock, right, that's the Asia session plus the Europe session. Whenever you see it just straight consolidate, you can expect really good price action for the morning. And so it runs down, like lots of volatility. It runs down beneath the low of the day at 6 a.m. and it runs up to the order block. The best trade would have been that run lower to 6 a.m. 5 a.m. to 6 a.m., which isn't usually a good time to trade, but that was when it would look the clearest to me, and I'll talk about that. But yeah, we ran back up to the order block, and I was saying here on Friday how there's nothing that stops it from going lower here, even though because we've had this run lower and then this run up to the order block. 8:30 news ran it up there. I was saying how if it creates an order block and it closes beneath this candle at the 9:30 open, right, that's a 9 o'clock hour, then I would expect another run lower. I wouldn't expect a TGIF setup, and I'd look for a TGIF setup later in the morning. My mistake was later in the morning. We had the TGIF set up in the afternoon, not in the morning. But at that 6 a.m. move lower, you had a run above this short-term consolidation. We're looking to go higher, so we're going to aim for a manipulation lower, that low of the day. And we have a change in the state of delivery as price is closing beneath this up close candle and inside these candles. Look at the bodies, how close it is to the balanced price range. And it's continuing to close lower, and then it runs back into the fair value gap. I'm highlighting this part here because it's a fair value gap and it's a balanced price range with this fair value gap there. And price is really finding a lot throughout the whole day support and resistance around this area. And we run quickly lower down to that level, which we can look for a reversal and then run it higher, and then again same thing. But I didn't like how it looked. You see that 9:30 opening, again, not making a higher high, just running lower. I don't really like it when that happens. I prefer 9:30 to run against the range and then deliver for the rest of the morning. So this is the 1 minute chart. I was watching the consolidation here and saying that we could go short off this gap, but I'd look for confirmation on the 1 minute. So what would that be? That would be these up close candles, like here for example. An up close candle is created, and I'd wait for price to get underneath this area. So if you drag that out, it happens over here. Wait till it closes and it breaks this level, and then it comes back into it. You could have paired this fair value gap with that fair value gap there, right? The one here, and use that to go short. I was watching this balanced price range there. There's a fair value gap here. There's a fair value gap there. There's a fair value gap here with a volume imbalance, and there's this big breakaway gap there with an order block. So I would have went in short there, put my stop loss up here, but this is way outside of my time. So I just watched it instead, and it continued running lower. 1 minute chart, and again, nothing I liked here. This is 9:30 open. Nothing I liked here. It just dumped. Like there's no manipulation. Not even if I traded 8:30, there's not even anything that could get me in here, except for this inverse fair value gap on the 5 minute chart here. But that's low probability. 9:30 could make a move higher there. Ended up not doing so, and it went lower. So nothing I could have really done. And we had kind of just the afternoon was nice afternoon, but the thing is, with how the morning moved, no way would I have been able to expect the afternoon to do a TGIF back to midnight open. There is no way I could have expected that. But what happened was it created an order block, and then it ran higher, displaced, leaving a fair value gap, came back to the fair value gap, used this as a propulsion block, and continued running higher to fill in this range and all these gaps. And you can see as it's creating that propulsion block that moved lower into the 15-minute fair value gap, it's created the short-term low, initial run higher inside that fair value gap, and then another run beneath it to falsify the early buyers, the people that bought the 15-minute fair value gap early. And then it creates that breaker and it runs higher from there. So it creates an order block here. Those down close candles are now an order block, 1, 2, 3, because it ran that liquidity inside a higher time frame PD array. And then it ran higher, propulsion block with these two down close candles trading into the order block, running higher there. As you're looking for this move lower into the short-term lows, you're identifying evidence that it is showing you that it wants to go lower, like this fair value gap here, which price, when it closes above it, comes back and uses this as support, right? You could have bought the close up here. I know some people do that. You could have bought inside the breaker when it comes back to it, the breaker high up there, the balanced price range here, leaving this fair value gap there. There's lots of different reasons. You could even just bought this low straight up and just got ahead of everything. Whatever, or just blindly buy the 15-minute fair value gap. But again, depending on how you are comfortable with entering, how you're comfortable with trading, that all changes. What I'm doing is I'm just highlighting the logic and the ideas, so that when I see this logic play out real time, I know with my model, what to expect, and I'm not surprised, and it makes trading a lot easier that way when you have these mental images of what price is going to do real time. But yeah, that was it for this week. I believe we're done. Yeah, so yeah, that's all. Have a good week and good luck next week.